Your credit report. It can feel like this mysterious document that has a huge say in your life, whether you get a loan, a new apartment, or even a job. But who's in charge of it? Well, today we're going to pull back the curtain on the single most important law that governs it all, the Fair Credit Reporting Act, or FCRA for short.
Now, this isn't just some dusty, boring legal text. The FCRA is a powerful set of rules that came directly from the U.S. Congress and was built with one person in mind: you, the consumer. You can think of it as the foundation of your financial privacy.
And this quote right here, it really gets to the heart of why this law was created. Back in 1970, Congress basically said, hey, wait a minute. They realized that if people couldn't trust their credit reports to be fair and accurate, it wouldn't just be a personal problem. It could shake the public's faith in the entire banking system. The stakes were, well, massive.
So to solve this pretty huge problem, the FCRA was born. It became the official rulebook for how your financial information is gathered, how it's shared, and how it's used. Let's dig into who the key players are in this whole system. So what are we really talking about here? What is this system the law is in charge of? You know, it really just boils down to two main ideas. And once you get these, everything else about the FCRA and your rights will click right into place.
First up, you've got the Consumer Reporting Agency, or a CRA. You probably know them by their names: Equifax, Experian, and TransUnion. These are the companies that collect and file away all your financial info. I love this library analogy. They don't write the stories themselves, but they collect all the books and are in charge of who gets to check them out.
And what are the books in that library? That's your consumer report, what most of us just call a credit report. It's basically any information about your credit habits, your character, your reputation, anything that's used to make big decisions about you, like for a loan, a job, or an insurance policy. Okay, this brings us to a really important question. If this report has so much sensitive stuff about you, who actually gets to see it? Well, the FCRA is super strict about this.
So, is your financial life an open book for anyone to browse through? Absolutely not. No way. In fact, that's one of the main reasons this law was created, to make sure it wasn't an open book.
Access is only allowed for what the law calls permissible purposes. So yeah, a lender can check it if you apply for a car loan. A potential boss might look at it, but only if you give them written permission. An insurance company can use it to figure out your rates, but your nosy neighbor, a random telemarketer, nope, they can't get access. The reason has to be totally legit and fall into one of these specific buckets.
Okay, so we get the system, we get who can see our info. Now let's get to the best part of this whole explainer: the power the FCRA actually gives you. It really all comes down to three fundamental rights.
First up, the right to see what's in your file. The law is crystal clear on this one. You have the right to know everything a credit reporting agency has on you. You get to look over the shoulder of a bank or an employer and see the exact same information they're seeing about you.
Okay, so what happens if you look at your report and see something that's just wrong? Well, that brings us to your second huge right, the right to dispute it. Mistakes happen all the time, maybe an account that isn't even yours, or a payment that's marked late when you know you paid it on time. The FCRA gives you the power to challenge those mistakes and force them to investigate.
And your third key right is the right to protect yourself. This is all about being proactive, right? But before we get into the modern tools for that, let's quickly walk through how you actually fix a mistake, because that's a huge part of protecting your financial story.
So when you spot an error, the process is pretty simple. You tell the reporting agency about it, and they are legally required to investigate, usually within 30 days. And here's the absolute best part. If the creditor can't prove the information is accurate, it has to be deleted. The burden of proof is on them, not on you.
All right, now let's talk about those proactive tools I mentioned. You know, with threats like data breaches becoming so common, the FCRA has had to keep up. It now gives you two really powerful ways to lock down your credit file. Knowing the difference between a fraud alert and a security freeze is so important. A fraud alert is kind of like putting a sticky note on your file that tells lenders, hey, be extra careful and double check that this is really me. It's perfect if you think you might be at risk. A security freeze, on the other hand, is a total lockdown. It's like putting a deadbolt on your file. It stops the agencies from releasing your report to new creditors at all unless you say so. It is, without a doubt, the strongest way to stop an identity thief in their tracks. So, here we are, more than 50 years later. Why is the Fair Credit Reporting Act still one of the most important consumer protection laws out there?
It's because it does so much more than just set rules. It makes sure that the financial story being told about you, the one that could decide whether you get a house, a car, or that new job, is accurate, it's private, and it's fair.
It literally gives you the power to read your own story, fix the mistakes, and protect it from the bad guys.
But at the end of the day, these rights are only as powerful as you make them. The law guarantees that you can see your reports for free every single year. So I'll just leave you with this one question. When was the last time you actually checked yours to make sure your story is being told right?